Okay, gang, we've got audio now. I want to apologize for that. It was working great before we ever started. Hopefully you can all hear me now.
Yep.
Share. All right, fantastic. So I'm going to get back to the presentation. We are I'm going to look at the individual items that will affect people. Tom will then follow up and look at the business information. When we're done, we will open up the line for questions. There is a chat feature, and I'm muting everybody. There is a chat feature within Zoom. You feel free to enter any sort of questions you have there, and we'll be checking them. We apologize, we had to get on the phone here to do the audio. Computer audio was working great when we started. I'm not sure what happened. So let's get started before something else messes up. So let's talk about the very first thing, which is the stimulus checks. You've all been hearing about them for quite some time. Basically, one of the things that's important to remember is that these stimulus checks are considered an advance, a credit, or an advance on your 2020 income taxes. They're based on your adjusted gross income. So that's your AGI. That's the amount basically at the bottom of page 1 of your tax return before you get to your itemized deductions. So that number, depending on that number, will determine how much your check is going to be. So it's also based on your most recently filed tax return. So if the return you most recently filed was 2018 and you made more than these threshold amounts, but for 19 you're going to make less and qualify for a full check, then you'll want to hurry up and file your 2019 return. So as you can see here, if you're single, the full payment will be $1,200. That assumes your income's under $75,000, and that income is phased out, or the amount of your check, the amount of your payment is phased out between $75,000 and $99,000. It's phased out at the rate of $5 for every $100, or roughly 5% of your income over the threshold. If you're head of household, meaning you're a single person who cares for dependent children, head of household, that you're phased out, you still get your $1,200, but your phase out begins at $112,500 and phases out completely at $146,500. For a married or a joint return, you would actually get $2,400 or $1,200 per person. If your income's under $150,000, but it phases out between $150,000 and $198,000. Same phase out percentages. And then of course, you also heard there's also a $500 payment you'll receive in addition to the $1,200 for each dependent child. A couple of other key things. Let me give you an example before we go to some other things on these checks. Example here is a married couple who has no children with an AGI of 190,000. That's 40,000 over the 150, and so you would take that 5% of 40,000, which is $2,000, and then you would reduce that refund check by that 2,000, so they would get 2,400 minus 2,000, or $400. A couple of questions we've had already was what happens if in 2018 and 2019 your income was above the limits, but because of all this craziness, your income goes below. You're going to get a refundable credit on your 2020 return. So if, for example, if your income dropped below the 150 as a married couple in 2020, it was above it for 18 and 19. Well, in 2020, you would actually get a refundable credit when you file your 2020 tax return. So that's, as I mentioned earlier on, these checks are considered an advance credit on 2020's tax return. And then the other question we've had is, what if I get a full refund or a full check, so to speak, in this year, this month, next month, but my income goes way up in 20 for some unusual reason. Well, there's no requirement to repay any of this money. Once you receive your money, that money is yours. So there's no clawing back of that money. A couple of other things that are important is that these payments are for non-resident aliens are not eligible for the rebate. Basically, you need to have a Social Security number and live in the United States as a primary resident. The other thing we've been asked quite a bit is if you're a taxpayer who's currently has an installment agreement with the IRS, do not worry. Your check will be paid to you. They will not keep the refund or keep that check and apply it against your installment agreement. Your installment agreement is still in force. You still need to make your installment agreement payments, but you will still get a payment from the government. The other thing that you may have heard is the amount is planned to be direct deposited into your account, and whatever that account was on the last return you filed where you used your bank account. And every taxpayer is going to receive a letter from the IRS indicating that the check has been cut, that it's been dispersed. And if your payment isn't received, there's going to be a phone number to call so they can reissue it. So what's going to happen in this last point here is that a date of determination is going to happen. We're not exactly sure when that's going to be. You've heard that they want these checks sent in the next 3 weeks. So at some point between now and then, they're going to pick a day and perhaps a range of Social Security numbers, and they're going to determine which return is on file. And so if your 19 return has been filed, we're going to use your 19 return to determine whether or not you get a check. If you haven't filed your 19 return, they're going to use your 2018 return. And for some of you that perhaps haven't been filing a return because you don't have enough income, well, as long as you're getting Social Security payments or similar type payments that are reported to the IRS, then you'll still get a check. The IRS will be digging through that and will know who to send a check to. And then there'll be a methodology for those that somehow don't fit or you don't get a check. There'll be a way to call and hopefully figure out how to get paid. Again, we don't have all the details on this. A couple of other things for individuals: unemployment benefits. Usually, state of Texas, most states, the amount you get in unemployment is usually 50% or so of what you've been getting paid. For the 4 months through July the 31st, because of this act, the federal government's adding $600 a week to whatever your state unemployment is. So for example, if you're getting $500 a week from TWC or whatever state you may live in, the federal government's going to add another $600 to that, and you'll get $1,100 for 4 months. If you're already unemployed, if you were laid off 2 weeks ago, those $600 weekly payments will be paid to you retroactively. And then, conversely, if you stay employed, do not become unemployed until, say, the end of May, well, then you're only going to get that extra $600 through July 31st. Now, I will just mention here, as we've seen in previous disasters or times where the federal government added to unemployment, there probably is a chance that some of this could be extended. But as the law stands now, that would end on July the 31st. The other really interesting thing about this is it also includes self-employed people or independent contractors or gig workers, if you will, that are generally not covered by unemployment insurance. Now, how to apply for that? We don't have the answer to that just yet, but if you're an independent contractor who's been paid on a 1099 as a contractor, and you're no longer employed because of the COVID-19, you're going to be able to still get some unemployment from the federal government. Retirement plan distributions. This is an area we've seen before with Harvey. You have the ability to withdraw up to $100,000 from your retirement plan, be that an IRA or a 401k or whatever you may have, and you have the option of paying that back over a 3-year period. And again, there's no penalty associated with this. If you were to pull out, for example, $90,000, you would not have to pay a penalty, and you could have the option of basically paying that $90,000 back by adding $30,000 to your income in the next 3 years on your next 3 tax returns. Or you can wait until 3 years. You can elect to repay it at the end of 3 years. And at that point, you write one, you have all of that income, all 90,000, if you will, would come back into your tax return in that 3rd year. But again, that would be sort of like an interest-free loan that you would have for 3 years. The other thing that's of interest is if you're 70 and a half and you've already begun your required minimum distributions, you are not required to take an RMD in 2020. The last couple of points there apply to someone who just turned in 2019 70 and a half. They are generally, if you hadn't taken your first RMD, you're required to take it by April 1st. You, again, do not have to take that RMD. However, if you are going to take it, you still need to take it by April 1st. Last couple of things here on individual impact is that individual charitable contributions, there's a special above the line contribution for 2020. And basically what that means is even if you can't itemize your deductions, you'll still be able to deduct $300 on your tax return in 2020. Those are for cash contributions only, not non-cash. So it has to be a check you wrote or cash you gave. And then the other part here for charitable contributions is the 60% AGI limitation has been waived. And that basically doesn't apply to a lot of people. It just means that whatever your AGI is, the max you can give to charity is 60% of that. If you made $100,000, the most you could give away in charity would be $60,000. And this year for 2020, that would be waived, so you could give as much as you want, and it wouldn't be a problem. So those are the key things on individuals. I'm going to hand it over to Tom to talk about all the business components.
Hello, everyone, and welcome. So on the business side, probably the biggest loan or loan forgiveness aspect is what's called the Payroll Protection Plan. It is under Section 1102 of the, let me see. Enter? No. All right. Okay. There you go. It's under Section 1102 of the bill, and I'm thinking of it as the bankers are going to go crazy act, really, because the SBA is bringing in all types of different bankers, credit unions, other non-banking entities to help administer this because it's going to be massive. Anyway, $350 billion of the $2.2 trillion is allocated to the small businesses to help keep workers employed. It's 100% federally guaranteed loan to small businesses to maintain their payroll. They can be forgiven, and we're going to be getting into that, how that forgiveness would take place and how it's calculated. I can tell you that in some discussions with bankers, they don't know what the heck is going on right now. They're just assessing this themselves, and if anything, they're going to be busier than we are right now. So it's for employers of that have less than 500 employees. However, there are a couple of exceptions for restaurants and hotel industry where it's 500 per location, per physical location, if they have more than one. Now, the measurement period for these payroll protection plan loans is February the 15th through June 30th. The maximum amount that can be borrowed is $10 million, and that's up through December 31st, 2020. As Randy mentioned, the SBA side has been crashing on a daily basis. So loans are going to be being made for months and months, and everybody is rushing to the door to get them right now. So, I think we're going to have to take some deep breaths, and unfortunately, a lot of our cash flow isn't going to be able to withstand it. So there are, sorry. Huh? Oh, I'm sorry. Yeah, so the allowed uses, it is for payroll and payroll support, including salary and wages, vacation, family leave, sick leave, that type of compensation, payment for tips for restaurant-related groups, group health benefits, payment for retirement plans, and Texas Workforce Commission, SUTA, and then for mortgage or rent payments, and that's for the interest portion of mortgage or rent as in facility costs, not copier leases and that leases of that ilk. And then also utility payments, electricity, gas, water, telephone, internet. When I say excluded uses, you can use the money for whatever you want. In calculating what the forgiveness amount is going to be, you cannot use these items: compensation in excess of $100,000 per employee, payroll taxes, railroad taxes, other income taxes, any employee whose residence is outside of the United States. That'll probably be a lot more affected to people living down in the border areas. And then qualified sick pay or family leave that is going to be credited under the prior bill that was signed, the Families First Coronavirus Response Act. So borrowing limits. The loan is up to 2.5 times the average monthly payroll costs incurred during the year prior to the loan date. So, you know, that throws a little bit of a wrench in it, because it's not going to be like your last calendar year. You can certainly use that as a proxy. That's what I did to calculate what our potential benefit was going to be. But you'll have to do it from the date your loan was made and walk backward for a year. If the business wasn't operational in 2019, they're looking at January and February of 20. And for seasonal employees, they're looking at the period you can see there, a 12-week period beginning February 15th or March 1st, and you get to decide that. So the loan is based upon payroll and dependent benefits only. The proceeds can be used for payroll and other things, and the forgiveness includes costs associated with mortgage and utilities as well. So just for an example, you have a company, their loan limit is $200,000 based on their prior year numbers. And during the measurement period, they have $140,000 in payroll, and then rent and utility costs of $40 for $180. So if they got 200, they have to pay back 20. And the SBA loan period is now going to be 10 years per the bill. Same facts, and if rent and utilities is $70,000, it ends up being $210,000. The excess is what it is. It's just an unreimbursed amount of payments. Now, if you reduce your workforce, there is a reduction that in the amount of forgiveness that will be available. And they're looking, I mean, obviously this is to keep people employed. So if excuse me, if the reduction is greater than 25%, they're going to be looking at FTEs over the 8-week period beginning when the loan originated, and look at the same period last year, and look to see what that reduction is going to be. And, you know, obviously if people have been laid off, what the government really wants is to get them back to work. So if they are placed back in service before June 30th, you can recoup or reconstitute what that reduction in wages or in the credit for forgiveness is. Now, that's not the only type of loan that's available out there. missed that. There's the Emergency Injury Disaster Loan, or EIDL, and they're available to businesses, individuals, sole proprietorships, independent contractors, private nonprofits from now through December 31st of 2020. They will do loans up to $1 million. Previously, the SBA loan limit was $350,000. And for these loans, the SBA is actually waiving personal guarantees on advances and loans below $200,000, which is pretty interesting. They're also approving these loans, or they will be able to approve them based solely on the applicant's credit score. So you can imagine the heyday people are going to have. There's a couple of other things that are really interesting with it. It allows an eligible entity who's applied for a loan to request an immediate advance on that loan up to $10,000. And the SBA has to distribute that to you within 3 days. Now, here's like, either you can go in and rob a bank, or, you know, it allows the applicant to not have to repay that advance, even if they're subsequently denied for the EIDL loan. So you can just walk in and make an application, and if you're denied, you can request this loan. If you're denied, you still get the money and you get to keep it, and you're done. Some of the other provisions that are out there, I see I misspelled section 2301. It provides payroll tax credit available to business individuals operating sole proprietorships, independent contractors. Oops, I'm sorry. Yeah, I gotta flip this. I'm here. Anyway, it's 50% of wages. It's the first $10,000 of wages for each employee. And the credit's available for employers whose operation was partially or fully suspended due to COVID-related shutdown, or their gross receipts declined by more than 50% when compared to the same quarter in the prior year. Let's see. For companies with 100 or fewer employees, this is for all wages for that person, and the credit, again, is on the first $10,000 of compensation, including health benefits. Let's see, and the credit provided for wages paid or incurred from March 13th through December 31st. If you have over 100 employees, you still get the credit, but you have to calculate the period only for when they were out of service due to the COVID-19 related circumstances. Section 2302 allows you to delay the 6.2% employer match on Social Security for 2020. This is an opt-in, I believe, item, so you can tell your payroll service that you are not going to be paying that. You do have to repay it. This is not a grant of any type. It is just a deferment of that 6.2%, and it's required to be paid back half in 2021 and half in 2022. And then you've got Section 2303 of the law that changes the rule for NOLs again. NOLs get changed every time a law changes. In net operating loss. And so a net operating loss, where am I? Let's see. Yeah, so you can go at this point back and amend 2018, 2019, or the upcoming 2020 return and go back 5 years, carry back 5 years to recoup prior taxes that have been paid. Trump's Jobs and Tax Cuts and Jobs Act of 2018 put some limits on the amount of an NOL you could use to offset income. This provision in this law takes it away. so you can utilize 100% of your NOL to offset income. And like I said at the bottom of this, that's enough of this stuff for today. There's a lot to digest. We're still reading and looking at little pieces of the bill and some big pieces. It certainly has everybody on their toes. It's a very important bill that is out there, and everybody wants something from it, and they want it now. So this has been recorded. Randy will take over. Why don't you tell them that?
Yeah, you see on this slide here that we are recording this webinar. Hopefully we'll edit it before we send it out, so you won't get our technology boondoggles. But we also will send you the slides for the webinar that I think would be helpful. And then we are tentatively planning another webinar for later this week, perhaps Friday. We're going to sort of, again, this is a dynamic state of affairs, if you will. One thing I meant to mention earlier and I did not, on our website at rma-cpa.com, we have at the very top of the web page a button that says it's about the coronavirus, and it says learn more. And we are literally updating that page and the information there every single day. And there's a lot of effort being made to pull the information, reading of the bill, and updating that information. So I encourage you to go to our website and look at that button. Just go drill down, and you'll see how it's very well organized, and all that information is there. And I think it will be very, very helpful. If you go look at that, you'll see a couple of the things we pulled for our presentation today came straight out of there. So I'm going to stop sharing my screen and go look at the chat and see if we can answer any questions. As always, you guys can feel free to call us, email us, whatever. There's a lot of questions out here, and some we'll answer. I'm just going to run through a few. There's 49. So actually, some of those are just I can't hear you text. Let's see. There was a question in here about who's our favorite SBA lender for PPP applications, and the answer to that is a lot of banks are going to be SBA lenders. Some of the SBA lenders we've worked with a good bit have been Frost and Amegy. There's a couple of other good SBA lenders in town. Even a couple of credit unions do a lot of SBA loans. Wells Fargo has a good SBA loan department. But what I believe we're going to find is basically every bank is going to have the opportunity to disperse these funds. They're going to have to do that because just the sheer volume of applications, I believe, is going to require that a lot of banks participate. Here's another question. It says, I have 2 S Corps, but neither issue me a regular paycheck at the end of the year to issue a paycheck and profit distributions. How would the business loan apply to me? It's a great question. The key for this PPP that we call this payroll protection plan, the key for that is having payroll. So the way you qualify and the way you get 2.5 times your average monthly payroll is from your payroll, from 941s or W-2s. So if you don't have payroll, that plan's not going to work for you. You're going to have to use one of the other SBA loans that we talked about today. There's a question that says, is the PPP loans available to businesses who reduce payroll but keep all employees? The answer to that would be yes, absolutely. Again, the key is you're going to be looking backwards. Your previous 12 months of payroll divided by 12 gives you your average monthly payroll. That number times 2.5 is the amount of the loan you can receive. And if, for example, you cut your payroll cost by 50%, then the odds are in the next 8 weeks, which is the next 8 weeks after you get your loan, that's what the IRS is looking at to determine, or the government is looking at to determine how much of that loan is forgiven. So if you're forgivable. So if your payroll goes down, but you remember get to add to that rent and utilities and all sorts of other things, that'll probably drive that number up. So worst case scenario, you may have a portion of that loan that is required to be paid back, but the vast majority of it hopefully will be forgiven. Let's see, other questions. Yes, there was a comment in here about, I've heard that you can use 1099 or contractors in the payroll calculation. That is correct. If you use contractors in addition to employees, you can use those amounts as well. So those would come from your 1099s that you issued to those contractors. So yes, you can do that. Let's see, other questions. Where's my thing here? The question, there was a question here, does the owner's salary get included as part of loan and forgiveness calculation? Yes. I can't remember if Tom mentioned, he probably did, that when you do your look back for the previous 12 months of payroll, the maximum salary you can include in that is $100,000. So if you have an owner making $200,000, for example, during the previous year, you can only use $100,000 of that when you're calculating your average annual payroll. So the max salary they'll allow is $100,000 in calculating that average monthly payroll. Let's see. There was a question about the $10,000. See, the $10,000 advance. Somebody had said that it does not have to be tied to a loan app. Someone just applied online today, and they are dispersing that. I truly don't know enough about that yet to fully answer that.
In the bill, it did talk about having it was part of the emergency, the EIDL, and it talked about there being an application. If they're not requiring that, gosh, who wouldn't do that virtually immediately?
Right, exactly. One of the questions someone else asked on that $100,000 cap, that's all employees. That's all employees, not just owners. So again, if you had a roster, for example, of all your employees, anyone who made over $100,000 for the year, the most you could use is $100,000 in your calculation. Let's see. There was a question that says, is this taxable on the annual 2020 tax return? And I'm guessing if you're talking about any of those loan proceeds, they're not taxable. The worst case situation you're going to have with any of these loans is that they would be just that, a loan. It would not be forgiven, and you're going to have to pay them back. I believe the interest rate is very low, 3%, 4%,
4% maximum.
4% max rate, and a 10-year repayment period. So again, most likely your worst case scenario is that you potentially have some portion of the loan that you do have to pay back, and that would be paid back at a 4% interest rate over a long period of time. So the forgiven part is not taxable. It's not considered taxable. It's considered loan proceeds that you would have to pay back. Okay. I think we are at the end of our rope here. We will.
There's a question.
Well, there's a whole bunch. There's lots of questions. We will. I tell you what. We will save all these questions, and for those we haven't answered, we'll shoot you an email, or feel free to email us, and we will get back to you, get you the answers. So thanks again for your participation today. Again, apologize for our technical difficulties. But we will be letting you know if there is another webinar. Again, we may very well come back, even if it's short, later this week, perhaps Friday, because I know I'm getting some feedback here. There's some applications and a few things that are already starting to hit the street, if you will. And so we will be finding all that and putting together another webinar so we can get back to you guys. So thanks again. We appreciate you guys, all of our friends, all of our clients. We are here for you. We are more than happy to help. I mean, we are looking at all this for our own business, but we've got lots of phone calls and lots of feedback from our clients and friends, and we are doing all we can to help everyone. So please reach out to us if there's anything we can do for you. We are truly here to help. So have a great afternoon. Again, thanks for your attention, and we will be in touch.